Imagine this: you wake up one morning, check your portfolio, and see that your initial investment hasn't just doubled, it has multiplied by a factor you thought was reserved for lottery winners. The dream is intoxicating, isn't it? It's the exact fantasy being sold to you right now by a chorus of smiling faces on the internet, the self-proclaimed gurus and financial influencers who have discovered the next big thing, the double RV phenomenon. They paint a picture of inevitable wealth, of a financial shortcut so powerful it feels like cheating the system. The charts they show are vertical, the testimonials are dripping with life, changing money, and the community they've built is a frenzy of celebration and confirmation bias. But I need you to do something for me right now. I need you to press pause on that euphoria. Take a deep breath and step back from the screen for a moment. Because what if I told you that this entire celebration, this coordinated chorus of excitement, is not what it seems? What if the music is about to stop, and the only ones who will be left without a chair are the retail investors, the everyday people like you and me who just wanted a piece of the action? The truth, the dark and uncomfortable truth that no one in that echo chamber dares to whisper, is that you are not being invited to a party, you are being positioned as the exit liquidity. Let's peel back the glossy veneer and look at the cold, hard mechanics of what a double RV actually represents in the context of most projects, especially in the volatile world of crypto and speculative assets. At its core, the concept relies on a specific tokenomic trigger, often a massive buyback or a liquidity event that dramatically reduces the circulating supply, thereby theoretically skyrocketing the price. The gurus explain the mechanics with slick animations and simple metaphors, making it sound like a fundamental law of physics. But they deliberately leave out the most critical part of the equation, the human cost. For one person to experience that 1000% gain, another person, or more accurately, thousands of other people, had to provide the initial capital and the unwavering belief that fueled the pump. The entire structure is a pyramid of faith, and the double RV is the glittering apex designed to attract the final, largest wave of believers. The data doesn't lie. When you analyze the wallet activity of projects promoting this narrative, a chilling pattern emerges. A handful of early wallets, often labeled as team or co-system wallets, hold a disproportionate percentage of the total supply. Their selling pressure, when unleashed, can and will obliterate any price gains made by the retail crowd. The celebratory tweets and viral videos are a smokescreen for the quiet, systematic distribution of tokens from these insiders to the new, hopeful buyers. You are not buying into a revolution, you are buying the bags of those who got in before the hype machine started. This is the first layer of the lie. It's a narrative carefully constructed to create a sense of urgency and inevitability, to make you feel like you're missing out if you don't mortgage your logic and jump in head first. But the most dangerous part of this entire scheme is what it does to your own psychology. It rewires your risk assessment. When you're bombarded with success stories, your brain starts to dismiss the very concept of loss as an impossibility. This is the trap, and it's baited with the promise of easy wealth. So, before we even dive into the specific red flags and the on-chain evidence, I want you to internalize this one fundamental truth in this game: the house always wins unless you change the game. And changing the game starts with skepticism. It starts with asking the hard questions that the fanboys and the gurus will immediately dismiss as FOMO. Your greatest asset right now is not your capital, it is your critical thinking. Hold on to it tightly, because what I'm about to show you next will challenge everything you think you know about this so-called opportunity. So, where are these lies hiding? They're not in the open. They're in the shadows of the so-called transparent white papers and the deafening silence on critical details. Let's move beyond the theory and put the double RV project under the microscope. The first and most glaring red flag is the token distribution chart, a document that is often buried deep in the appendices or presented in a way that is deliberately confusing. When you finally untangle it, you'll typically find that a staggering 30 to 40% of the entire token supply is allocated to a vague category labeled co-system or development fund. Sounds harmless, even responsible, right? Wrong. In practice, this is the team's slush fund. It's a massive over-the-counter treasury that they can tap into without any public vesting schedule or hard locks. This means that while you are buying tokens on the open market, praying for the RV event, the team holds a sword of Damocles over the entire project, a vast reservoir of tokens they can dump on the market at any moment to realize their own profits, completely derailing the price momentum and leaving your investment in ruins. This isn't speculation. It's a pattern we've seen play out time and time again. Then, there's the cult of personality. The project's success is almost entirely tied to the charismatic leader, the visionary, who streams daily, hosts AMAs, and builds a personal connection with the community. This is a deliberate strategy. By making himself the face of the project, he becomes synonymous with it. Any criticism of the tokenomics or the roadmap is instantly deflected as a personal attack on him, and his loyal community will swarm to his defense, shutting down any meaningful debate. This emotional manipulation is a powerful tool to prevent the kind of critical analysis that would expose the fragile foundation of the entire enterprise. You're not encouraged to think, you're encouraged to believe, and belief is a terrible investment strategy. Now, let's talk about the ooze case. The project's fundamental reason for existing is often a convoluted, jargon-filled solution in search of a problem. It promises to revolutionize an industry, to decentralize a centralized system, but when you strip away the buzzwords, you're left with a simple token that does little more than go up and down in price. There is no genuine, organic demand for this token outside of the speculative frenzy the team itself has created. The entire ecosystem is a circular reference. The value of the token is dependent on people buying the token to use within the ecosystem, but the only reason to use it in the ecosystem is if you believe the token will go up in value. It's a perfect, self-contained logic loop with no connection to the real world. This is the essence of a house of cards. It looks impressive from the outside, but it lacks a foundation. A single gust of wind, a shift in market sentiment, a critical blog post, or the team deciding to cash out can bring the whole thing crashing down. And when it falls, the community, the people who were once called family, will be left holding worthless digital receipts while the founders disappear, their wallets fattened by the collective hope of thousands. This isn't a forecast of doom, it's a historical replay. We have the data from dozens of failed projects that followed this exact blueprint. The names change, the logos get updated, but the underlying playbook remains identical: create hype, foster a cult-like following, obfuscate the true token distribution, and exit before the questions get too loud. The double RV is simply the latest chapter in this old, predatory book. It's the shiny new cover designed to make you forget the tragic endings of all the stories that came before it. Your job, as a savvy investor, is to remember that history. Your job is to be the one person in the crowded room who isn't cheering, but is quietly checking the exits. Now, you might be sitting there thinking, hey, okay, I understand the risks, but what if this one is different? What if this is the exception? That right there, that very thought, is the most potent weapon in the manipulator's arsenal. The seductive whisper of being the special one, the smart one who saw the truth where others saw only risk. Let's dismantle that final layer of hope, not with cynicism, but with a clear-eyed, empowering alternative. The path to genuine, sustainable wealth does not lie in chasing a single, explosive, and statistically improbable event. It lies in the quiet, consistent, and often boring discipline of understanding value. Instead of pouring your capital into a double RV lottery ticket, what if you invested that same amount of time and money into learning fundamental analysis? What if you spent those hours scrolling through celebratory Telegram messages, instead reading a company's balance sheet, understanding its price-to-earnings ratio, and analyzing its market share and future growth prospects? That knowledge is a permanent asset. No one can ever take it from you, and it compounds over time, making every subsequent investment decision smarter and more informed. This is the real secret that the gurus won't tell you, because it doesn't sell a quick dream. It requires work. It requires you to become a true investor, not just a speculator. The double RV hype is designed to make you feel like you're part of an exclusive club, but true financial empowerment comes from self-reliance. It comes from building a diversified portfolio of assets you truly understand, assets that generate cash flow, provide dividends, and have intrinsic value beyond what the next person is willing to pay for them. Think about real estate that generates rental income, shares in a profitable company that rewards its shareholders, or even your own education and skills that increase your earning potential. These are the building blocks of lasting wealth, the kind that doesn't disappear when a developer decides to rug pull or when market sentiment shifts. The get-rich-quick narrative is a financial sugar rush. It provides an immediate high but is followed by a devastating crash. The get-rich-slow philosophy is a nourishing meal. It builds strong, resilient financial health over a lifetime. So, what is the single most powerful action you can take today? It's not buying a token. It's to open a blank spreadsheet and perform a brutally honest post-mortem on this double RV opportunity yourself. On one side, list every single promise and bullish argument the project makes. On the other side, list the hard, factual risks we've discussed: the centralized team control, the vague use case, the inflationary token supply, the reliance on hype over utility. Be your own most critical investor. If you cannot, with absolute conviction, argue against every single point on the risk column, then you have your answer. You have just saved yourself from a potential financial catastrophe. You have not missed out, you have opted out of a rigged game. This is your moment of clarity. This is where you break the cycle. The financial world is filled with noise, but true signal is found in silence, in research, and in patience. You now possess the knowledge to see through the hype. You have the tools to identify the traps. The question is, what will you do with this power? Will you go back to the frenzy, hoping you'll be the one to time the market perfectly, or will you choose the road less traveled, the road of education, discipline, and profound, unshakable financial literacy? The choice is yours, and it is the most important investment decision you will make today. Don't just be a viewer who consumes content, be a participant who changes their destiny. Start now. Open that spreadsheet. Your future self will look back on this day, not as the day you missed a pump, but as the day you started building real, permanent wealth on your own terms.